If you look back 2 years, in May 2022, the Reserve Bank started raising interest rates, and it did it 13 times. And that brought all the doomsayers out and the doom and gloom people telling us property values had dropped 10, 20, 30%. Now, there's no doubt that property values did stumble in 2022, and then in January 23, the market turned, and now for 16 months, property values have been kept rising. Today, Dr. Andrew Wilson is going to share with us the latest My Housing Market data about what's happened to property values in the month of May. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can update you each time a new show comes out. Believe it or not, we're now 40% of the way through 2024. So to get an understanding of how property markets have performed so far and what lies ahead, I'm looking forward to hearing the latest findings from My Housing Market from their chief economist, Dr. Andrew Wilson, Australia's leading housing economist. Hi, Andrew.
Yeah, good day, Michael. And doesn't time fly?
Yes.
We're on the cusp of June now, which is winter, of course. So we're out of the autumn selling season officially, but of course, notionally, the autumn selling season's probably got about another month to run anyway. And it's certainly been a very solid start to the year. And more data for May. First, My Housing Market first with the latest, of course. And the data is very consistent. Again, we always in our chats look at auction markets, don't we, every weekend, and they've been pretty consistent, and we're seeing the same sort of consistency with prices growth. And
well, they give a good indication of how people are feeling on the ground, which in due course leads to the prices that are achieved, which obviously now you're going to tell us. I mean, clearly the market's changed about 16 months ago in January in 2023, and they've kept moving upwards. But obviously we've got very fragmented markets throughout Australia, multiple markets. There's not one Australian housing market like the media often likes us to know. So I love the way you break it down to state by state and houses and apartments as well. So let's start with overall how things have gone, and then let's move deeper in.
Well, the national median house price over the May quarter, Michael, of course, we measure 3 months to May, and we compare that with 3 months to April. So it's a rolling quarterly model. It gives us lots of observations, but we can move from month to month on that quarterly basis. So it gives us a sort of a more of a real-time insight rather than using just stable data from quarter to quarter. So the national house price up by 0.3%, similar result to the previous quarter's 0.4% increase to 1,134,494. So we've had national median house prices up by over 15 of the past 16 months, and we're now up 9.08% over the past year. And so far, and over the past 2 years, Michael, national house prices have increased by 5.9%. And so far this year, Michael, those national house prices are up by 4.3%. And as you mentioned, we're around 40% into the year, so we're up by 4.3%. I'm not sure we're going to get to 10% because we're actually going to be comparing ourselves to what was a very, very strong period in the market last June and July, which was the catch-up market. I'm not sure we're going to see the same sort of clearance rate and prices growth that we had then. But nonetheless, I think we're certainly on track to see at least a 5% plus increase in median house prices this year. But of course, there is a bit of water to go under the bridge between now and the end of the year. And who knows what will happen in terms of the policy settings, given some rather interesting recent results. But yeah, national house prices up by 0.3% over the month. 4.3% this year so far, and 9.8% over the past year. When we look at the breakdown, Michael, most capitals reported increase in house prices over May, except for Melbourne and Hobart. They were steady, and Adelaide was the one capital that fell, down 0.3%. And Adelaide's been really leading the charge to some degree, Adelaide, Perth and Brisbane. So a little bit of a consolidation there in that Adelaide price model. But again, some very consistent results. Only Adelaide falling away, and it's still a strong result And when we look at the annual results, we've got Brisbane up 18.8%. Gee, good result there for Brisbane. Adelaide up 15.7%, and Perth up 23.6%. Wow, Perth over the past year. So strong results there from what I guess we call the big three, continuing Brisbane, Adelaide, and Perth. Sydney house prices up 9.3% over the past year. And Melbourne, as we know, hasn't been producing the same strong results as those other capitals, up by 2.4% over the past year. Hobart's still an underperformer by comparison, with annual house prices down by 1.3%, Michael. I think it's interesting when we look back 2 years, and of course that takes us back to the previous peak of the cycle, which was before the interest rate increases. We can see, and perhaps that's what's continuing to drive the Sydney market, is that Sydney prices are still just up 4.2% over the past year. So still some value in that Sydney market. I think that's activating buyers. Melbourne median house prices are still down compared to 2 years ago. We keep talking about the value that the Melbourne market is offering at the moment, and some early signs that's starting to pick up, particularly with rents growing quite strongly in Melbourne now. In Melbourne, Michael, we're starting to see some suburbs that are offering investors better than 8% yields, gross yields, because of those higher rents and stable prices.
It's worth remembering, Andrew, that when you talk about 2 years, that's when interest rates started rising in May 2022. People have often forgotten it because it just is in the news the whole time. And over that time, as interest rates started to rise, and not because interest rates rose, but because of a lot of other factors, the market stumbled for a little while. But in most cases, they've picked up, haven't they?
Well, they have. And I think that stumbling was just confidence. And there was the usual ridiculous doom and gloom predictions from many that prices were going to fall by 10, 20, 30% as a result of higher interest rates. Of course, the market eased because buyers and sellers sat on their hands with all those negative headlines. But following an overall fall of around 10% in 2022, the market bounced back and recovered most of what it lost last year, and it's continuing to grow. And I think when we look back 2 years, Perth's a real standout, Michael, up by 29% over the past 2 years. But of course, we know Perth's coming from a bit of a way back because it was an underperformer, given the end of those mining booms, which really pushed that Perth market along, particularly driven by the fly-in, fly-out mining workers. Similar results for units, Michael. Adelaide was the top performer, however, up by 3.2% over the month, followed by Brisbane and Perth. They were each up 2.3%. Of course, we always point out that Adelaide and Perth have smaller unit markets, so they tend to bounce around a little bit with volatility from quarter to quarter. Darwin up 1.4%. Sydney was up 0.7%, Melbourne up 0.4%, but Hobart and Canberra were down by 1.5% and 2.3% respectively. National unit prices up by 3.8% so far this year, Michael. They were up by 0.8% over the May quarter compared to the April quarter. Over the past year, national unit prices up 7.4% and up 5% over the past 2 years. Similar results over the past 2 years for Melbourne and Sydney. Sydney unit prices up just 2.8% over the past 2 years, and Melbourne unit prices lower by 2.7%. And again, that's helping to fuel those high yields that are now on offer in some of those unit suburbs in Melbourne. But look at Brisbane, Michael.
So just to make it clear, rents have skyrocketed while the entry price to buy that property that's producing the higher rent have actually held the same or dropped a little. And that's why investors are getting very good returns. You don't only buy for rent returns, but there's also significant upside potential, as we keep saying in Melbourne, because you couldn't replace the units at the cost you could buy them at today, Andrew.
Absolutely, 100%, Michael. And that's the point. We always say that higher yields signal higher prices eventually, because the money floods into those areas where those high yields, extraordinarily high yields are. And that, of course, pushes up values, and that ends up pushing down yields to more of a normalized yield. So we always see that. We've seen that in other markets we've called, and that's worked because money floats towards the higher returns. And as those returns and as those And as the money floats in, the asset value rises, and of course the yields fall away. But that's the best of both worlds: capital growth and still high yields. But and as I said, when we look back over the past 2 years, there's some real standouts for the unit market, Michael. Brisbane units up 32.8% over the past 2 years, which is a really big result. I mean, we've mentioned that Adelaide and Perth are smaller unit markets, so they tend to be a little volatile in terms of price outcomes. But that Brisbane market is a significant unit market, and those sort of returns show just how strong that Southeast Queensland unit market has been. And it's not that long ago, Michael, when all the doomsayers were telling us that the Brisbane unit market was going to be oversupplied for as long as you want to mention. You know, it was a
That's
glut
right.
of apartments. And now, look, we've got these tremendous returns for those that sort of got involved. And Brisbane's up 26.2% just over the past year, unit prices. So some very heady results there. And Brisbane units up 14%, Michael, this year so far. So some standout results, but generally housing markets are continuing to tick over with higher prices, with some really producing some good results.
Well, there's been some strong macroeconomic drivers, Andrew. Every week we have our Property Insider chat and we discuss the economy and interest rates and other factors. But Australia's economy has been strong. The fundamentals have been good, probably a bit better than the Reserve Bank would like. Interest rates have been stable since November 23.
Yes,
That's a while. Now, there's been talk about interest rates going down and people got involved in the market a bit, and now it went up. They talked about it going up. But overall, interest rates have been stable, the labour market's been strong, and all of that has actually underpinned this. It has a lot to do with how our economy is going and how people are feeling, Andrew.
Well, yes, and the real factor here, Michael, is that we have this chronic shortage of housing. We're not alone.
Yes.
Most other advanced economies in Europe, the US, the UK, are suffering this contagion where there's just not enough houses to go around. It's driving skyrocketing rents and higher prices. It's helping to create these unprecedented exclusions to the market from those wanting to get in. And there's really no sign of relief going forward. And I guess we're paying the price for all that ideology that's driven housing market policies over the last few decades. And the unfortunate thing is when you get to this position where you're hundreds and hundreds of thousands of homes short, there's really not much you can do about it. But it certainly makes investment in housing even more of an imprimatur, even more of a priority. You know, I think that's the lesson here, is that the asset class of housing is only going to become more of a worthwhile focus for investors. But look, we do have a strong economy. That's why it was sort of interesting. The speculation of lower rates is a little nonsensical, because lower rates, which of course we would always welcome as mortgage holders, gives you some relief, but not so much if you've got money in the bank, because it would mean a lower deposit rate. But it would also mean a higher affordability, which would only put prices up. But it would also put more money in people's pockets, would have them out spending, which would only put upward pressure on inflation, one would think. So I really think, and we've discussed this, that the best course going forward would be steady rates, and the best course for the market. And I think the steady rate environment is helping to give us these nice settled house price results from quarter to quarter, certainly positive. But you know, I think the next month or two will continue to record positive growth in house prices, Michael. And the affordability advantages, particularly of Adelaide, Perth and Brisbane, are significant, because their incomes are not far away from the Sydney and Melbourne incomes, and yet their median prices so far anyway are well below Sydney and Melbourne. Well below Sydney, not so much below Melbourne.
No, they're catching up to Melbourne.
They're catching up to Melbourne. But of course, the other point is that we've got plenty of migration still as a usual factor in Australia's economy, and that means we've got more demand coming through for housing. And we've already mentioned the rental market, which is a bit of a disaster zone for tenants, rents continuing to rise. And that gives plenty of incentive for, obviously, first home buyers that have got lots of incentive. The question is whether they have the capacity to get into the market. But investors, as we've said, are certainly incentivised with this very tight rental market. So we've consolidated our growth this year, 2024 looking to be certainly another positive year in the market. Not sure it'll be quite as strong as last year, but I do think that we're certainly in line for a 5 to 7% result this year, which would be following a 10% result last year nationally, would be pretty good news for homeowners.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. I'm sure it would be good news, and really that's a nice normal market, and the fact that the markets are fragmented and some are outperforming others is much more normal than that once in a generation boom we had a couple of years ago. There's a lot of new entrants into the market. We just thought that's normal. Every property everywhere around Australia is going up. That's not the case. One thing though, it's been a long time since I've seen Melbourne so much cheaper than Sydney. Melbourne's always been cheaper than the median house prices, but it's much less than, the gap's much bigger than normal. Again, suggesting what you keep saying, that in due course there'll be the mean reversion and properties will go up. Melbourne's economy hasn't been performing as strongly, and that's one of the reasons that our housing markets haven't. Investors have been leaving a little bit as well. But one has to take a long-term view and I guess wonder where the economy is going to be, where our housing markets are going to be in 3 years, in 10 years' time, not what interest rates are going to be doing in 3 months' time, Andrew.
Yeah, that's right, Michael. I think the important thing about the Melbourne market is, yes, on a number of metrics, it's the underperformer on a state-by-state basis, but the Melbourne unemployment rate is still in the low fours. And that's the important thing, that if people have a job and they're not worried about job security, which certainly in a basically a full employment economy, which we do have nationally, then that offsets a lot of other issues. And Melbourne's incomes are also still rising and they're still reasonably strong. It's just a confidence factor, in my opinion, Michael. And I think that just calls out the opportunities that the Melbourne market has. I mean, who would have believed that Brisbane eventually would have a higher median house price than Melbourne? Maybe it won't. Maybe Melbourne will start to pick up a bit. And those early signs are that with the rental market certainly surging, rents significantly higher, and those yields now quite high in some of those suburbs, particularly unit suburbs, then I think that will activate, as it usually does, those investor opportunities going forward. And I think that even with that the latest home loan data validates is that investors are still active in the marketplace, Michael. I think that we tend to ignore just how consistently strong investors have been, and certainly strengthening now. But why should we be surprised with these good returns, not just rental returns, but also capital growth?
Well, thanks for being first in the month with the figures. Once again, we'll be discussing the auction results when you bring them out every Saturday on your LinkedIn profile, and we publish them on Property Update. And once a week, we'll be having our Property Insider chat. Next week, we'll be talking about the latest CPI figures and all the other factors that are going to affect the housing markets, Andrew.
Yes, look forward to that. Interesting discussion on the latest CPI figures, Michael. Certainly a bit of a surprise, but we'll leave that for next
Well,
week.
it wasn't really, because you hinted at that, Andrew. So while it surprised many of the commentators, you told us what to expect when we had our last chat. Catch up with you then. Thank you.
Thanks, Michael. Thank you.